Hello everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 7th of January. It is Non-Farm Payrolls Friday today, the first one of 2022, and markets are doing their traditional consolidation ahead of the payrolls report. Bond yields, certainly treasury yields, are a little bit flat this morning, so that's helping Forex and indices to just settle down a little bit after a fairly volatile opening to 2022. But I think the volatility is likely to ramp up this afternoon on the back of this payrolls report. Expectation of 426,000 on the headline jobs number, but the ADP employment change was significantly higher than that, 800,000 on Wednesday. So that gives an indication that we might be in for a bit of a surprise for the payrolls report today. It'll be interesting to see if there is a positive surprise on that payrolls number. We could see the US dollar starting to drive higher once more, but also risk negative as well, because it increases the potential and the likelihood of an earlier Fed rate hike. So in terms of other data points we've got today, we've also got the Eurozone inflation number this morning. The prelim inflation is expected to show Eurozone inflation starting to pull back slightly, potentially then having an impact on the euro. Now, the charts we've got today, I've got charts that really do reflect, I think, the current mood that we're in at the moment. Markets are US dollar positive, but also risk negative, and we can see that that is driving Aussie dollar lower now. So Aussie dollar looking at that for a move to the downside potentially, and on that payrolls report we could see a lot of action around the Aussie dollar because it is a risk play as well, and I think the resistance comes into play and key overhead there. And also looking at silver, a drive lower on silver. Precious metals under pressure recently from those rising bond yields. So let's have a look at how the silver outlook is being developed, but also on the DAX. Again, a consolidation after a strong run higher as Wall Street has fallen away. The market has just started to consolidate. Key support now being tested. So let's have a look. And onto the Infinox MT5 platform, just looking at Australian dollar initially, and we can see the uptrend that we've been in the Aussie since the beginning of December has now been sharply broken to the downside. The last few days of selling pressure across Wall Street has really seen a risk negative vibe coming back into markets, and that has driven the Australian dollar lower to break this uptrend recovery, and we can see that confirmation through the momentum on the RSI as well. But also now, having been supportive, look at this band there between 71.70, 71.85, having been supportive on the way up, that's now becoming a basis of resistance, that intraday reaction high today. You can see that on the 4-hour chart here, where that old support becomes new resistance. It's now starting to fall away, even as the European session is taking hold. Australian dollar just starting to gather a little bit of downside move, and we can see the momentum on the 4-hour chart is also negative. So I think that reaction to this payrolls report could be key. As I said, that resistance comes in at 71.70 to 71.85. But again, if we start to break decisively below yesterday's low of 71.45, that really does put the market on the back foot for a test of that 70.80 level. The reaction low that we saw back in mid-late December could well come under pressure quite quickly. Strong payrolls report is risk negative. That would be Australian dollar negative, but also dollar positive as well with the strength of the payrolls report. So again, double whammy on the Aussie dollar there, and I think a downside break could be seen. Looking at the silver chart, quite similar actually. The recovery that we've seen since early mid-December has now fallen over, and the old support that we had in place, get the crosshair there, the old support around the 22.55 to 22.70 area, that has been decisively broken with a big negative counter yesterday. That really does change the outlook, but also look at the momentum being confirmed there, but with downside potential as well. Now there's resistance intraday today, 22 sort of 15, 22.20 initially there, basis of resistance. You can see that on the 4-hour chart, 22.20 coming in as a basis of resistance now, and again, a downside threat really does hold, and considering we've now broken that resistance and failing to retake that, breaking that support and failing to retake it on a resistance level means that potential for downside and moving towards 21.40 in due course. Finally, on the DAX, the strong recovery that we saw through the Christmas period has now started to consolidate with that risk negative move in recent days. But the support of the near-term breakout above 15,980 area. That is now holding as a basis of support, but the last couple of days, that is a shooting star candle that we saw on Wednesday, negative candle yesterday, negative open seemingly coming today, so just rolling over. And if it now starts to break down below that 15,965 level of reaction low that we can see on the 4-hour chart, if that breaks to the downside, 15,800 becomes the next area of support to be tested. And again, if that breaks, then you're looking decisively corrective again. But for now, it is holding up, but just for now. And I think this could just continue to play out as part of this trading range, the medium to longer term trading range, and it means that essentially we could be testing lower in due course. Thanks for watching. I hope you found it informative for your trading. I'll be back on Monday. We'll be starting to look ahead to a whole load of tier 1 data for the US with inflation and consumer data there. So I'll leave you with the Infonox support and resistance table, and I will speak to you again on next week. And good luck in your non-farm payrolls trading, everybody.